NIO Stock was a huge hot stock just a few months ago, but recently it's been making headlines for the wrong reasons. The stock keeps making new 52-week lows, and a lot of investors are left bag holding the stock, myself included. If you didn't already know, I purchased 100 shares of NIO about a couple weeks ago now at around $5.97-98 per share, so I am down pretty significantly on that position. And this is a perfect example for everyone out there how spec stocks can turn on you in a snap. If you aren't managing your position properly, you could be down significantly in your position in a matter of days or weeks. But anyway, the stock is now threatening to go under $5 per share. So investors are kind of left asking the question, is this an opportunity to go buy more shares of NIO? Or is this a trap and we should actually sit out of the stock for now, and once it reaches a more fair value point, we actually then consider purchasing more shares? Well, we're going to go through those questions today and kind of take a look here into NIO, at what price I think it's more of a reasonable valuation. And if you enjoy this video, guys, drop a huge like because I appreciate each and every one of those. So NIO, as of recording this video, is sitting at around $5.04 per share with a $5.348 billion market cap. And the stock currently has around 1.05 billion shares outstanding. So this means that if NIO stock did go down to around $4 per share, that would make their market cap around $4.2 billion or so. $3 per share would bring their market cap to around $3.15 billion, and so on and so forth. So now before we go any further, we gotta stop and ask ourselves, what price do we think that NIO is actually a good play at? Does it make sense that NIO is currently over a $5 billion market cap company? Well, to help answer this, let's take a look at their income from last year, or lack thereof. From a high level view, you can see that their earnings are just terrible right now, and we keep getting worse year over year. Quarter over quarter, it seems to be getting better, smaller losses, but this does not mean that they are out of the woods yet, and investors will keep a close eye on their next earnings report, in my opinion. Their actual net income from 2018, though, from their official numbers, is negative 23 billion Chinese yuan, which is around $3.5 billion US dollars negative. Not a very good figure, but perhaps the balance sheet will instill some more confidence here. Their direct cash reserves, when you look here in 2018, took a big hit, but their short-term and long-term investments did increase, so that is a good sign. Overall, though, they're sitting at around 1.3 billion US dollars in cash and cash equivalents. But the concern here is that they do have debt or liabilities, and currently that adds up to around 200 million US dollars. So when you subtract this from what they have in cash and cash reserves, they have a net of around $1.1 billion worth of cash after they account for their debt. Great, so 1.1 billion is what we have to work with. But didn't we just see that NIO lost $3.5 billion just last year? Yep, that's right, those are the correct figures, and this actually is the biggest concern with this stock, in my opinion. Now, 2018 may have been an abnormal year for them as they were ramping up production to get their cars out on the road. But if the Tesla story tells us anything, things will not get easier for NIO anytime soon. In fact, up until last year, the last 2 quarters of last year, Tesla was a company that kept losing money. They only started posting profits in the last 2 quarters. So it's going to take NIO quite a while, in my opinion, to post a profit, if ever. In fact, in my opinion, the chance of them posting a profit anytime soon in the next couple of years or so is pretty much zero, but all we can hope for as an investor is that their losses don't eat up all of their cash reserves. So now that we all got a reality check on the company, myself included, does that mean that NIO actually has a justification for having a $5 billion market cap? Now, they don't have $5 billion in revenue, they have only around $700 million in revenue. So it's trading at a 7 times multiple here. In many companies, this multiple is acceptable. Like, for example, if you look at Apple here, they have revenues of around $265 billion in the year, and their market cap is around $946 billion. So a world-renowned, highly profitable, extremely stable, blue-chip company is trading at only a 3.5 times higher market cap compared to revenue. Now, you may say NIO is a growth company. You can't really compare it to Apple, which doesn't have as much growth potential compared to NIO. And really, I would say that's a fair argument. So let's compare NIO to its closest rival, Tesla, which is kind of in a similar situation here where they have been losing a lot of money, but they've recently started to turn things around. Maybe that's a story for NIO as well, but let's dive in right now to Tesla and see how that compares. So Tesla currently has a market cap around $47 billion, and they bring in revenue of $21.5 billion annually, meaning they trade at a 2.19 times higher ratio, even less than Apple, but they have a lot more growth potential than Apple in my opinion, but that's for another discussion for another video. So Tesla's market cap to revenue ratio is 2.19, whereas NIO's is 7. Tesla has a lot more cash on hand than they burn every single year. They're somewhat profitable, and they have a very strong brand name behind them. NIO does not have any of these three things currently. So does that mean that NIO is currently an opportunity at $5 per share? In my opinion, if you're looking at the pure valuation of this company, the answer is no. For NIO to actually be a much more appealing play where I would actually consider maybe purchasing more shares of NIO, it would have to come down pretty significantly to something like $2 per share, which would put it at around a $2 billion market cap, which is a much more reasonable valuation here for the company. It would still be overpriced at that point because I believe it'll still be losing money at that point, but it's a lot more in line for what I would look for and what I would be more comfortable in to add to this position. Now, this is just my opinion, completely my opinion, and it does not mean I believe NIO is going to go down to $2 per share or lower than that. In fact, chances are it's probably going to rally back up, and I'm just going to keep holding on to my shares if it does. And what I found interesting was that when you look at the short interest here, you can actually see it's decreased substantially since the stock has come down below $6 per share. This implies that many investors who were short in NIO stock are now satisfied with the current price and they covered their positions. This also means that a significant rally up to $10 per share, like we had say on the IPO day or before last earnings, is much less likely in the short term. A lot of time when stocks shoot up very quickly, it's because the short sellers are covering their positions and they're buying back shares, which adds more buyers into the stock. This of course puts a lot of pressure on the stock to the upward side, and it keeps pushing the prices higher and higher. But now short sellers have significantly reduced their positions. This means that there aren't as many buyers out there in the market, and it's pretty simple. You see supply and demand, there isn't as much demand, so the price of the stock may not move as quickly. Nevertheless, though, you can't just use that as an argument for not moving higher, and I understand that. And NIO is a very volatile stock, and it is possible that after a blowout earnings report, if they do report one, the stock could be back above $10 per share. You never really know with the stock this volatile and this speculative, which is why I think it's very important to just manage your position here in this one. So with my position, am I buying any more shares of NIO? Well, currently my position in NIO is a very insignificant part of my portfolio, and even if I take a 100% loss on this position, the company goes bankrupt, I lose all my money, it does not really affect me financially. But if I kept adding to this position, it would increase the value of that position, and I would start to not feel comfortable with that size of a position in such a speculative stock. Remember, like I said plenty of times, NIO is a complete spec play for me, and I don't really consider this a true investment. It's more of a gamble here. Now on the flip side, if this was a company like Apple and it dropped this significantly, I would 100% be buying shares heavily because the company has proven itself. It's a profitable company, it's a blue chip company, and those are the kind of companies that I like putting a lot of my investment capital into. But when it comes to a company that's not profitable, that burns more money that they actually have on hand, and does not really have a world-recognized brand name behind it, and of course has a lot of competition in this space, can't really say that I'm that excited to add to this position, if ever. Not really much confidence that this company instills in me, and for right now I'm just going to be holding on to these shares, leave them in the account, kind of forget about them, and maybe check back on them every couple of weeks, every couple of months or so. So really, I would say at these prices, $5 per share, even $4 per share, I think that NIO is still more of a trap than an opportunity, and maybe I fell into that trap by purchasing close to $6 per share, but we'll wait and see what happens. Now, I really want to hear from you guys. If you're an investor in NIO, if you're considering investing in NIO, or maybe you sold out of your position, let me know in the comment section below. I'm in this stock with you guys if you are an investor in NIO, so of course if the ship goes down, I'm going down with the ship. So my personal bias, of course, would be for NIO to actually rebound, rally, and make new all-time highs, because then I would also benefit from that. But I'm trying to be realistic here. Maybe this is an investment that's not really going anywhere. We'll have to wait and see. Thank you for watching, guys. Hope you enjoyed this video. Don't forget to invest positively, and I'll see you in the next one.